Impact ventures have a core social or environmental purpose and mission. And so, in a sense, they're a sort of much deeper form of ESG. And historically, most of them have been private companies and receive venture capital or private equity investment. And really what we're doing through this public listing is building a bridge that allows mainstream investors, individual investors, and institutional investors who can't normally access these private equity, private investments to participate and to invest.
My guest now is James Tansey. He's the CEO of Kizmet Capital Corp. James, welcome.
Good morning.
James, let's start with an overview. You're setting out to become the world's first publicly traded ESG Impact Investment Fund. Tell us about that.
Yeah, so our focus is on impact ventures, which are companies that have core social or environmental impact through their products and services. And in most cases, this goes much deeper than what traditional ESG would cover. So ESG company reporting on ESG might make, ball bearings, shoes, cars, mainstream products, and they try to do that in the most environmentally responsible way that they can. Impact ventures have a core social or environmental purpose and mission. And so, in a sense, they're a sort of much deeper form of ESG. And historically, most of them have been private companies and receive venture capital or private equity investment. And really what we're doing through this public listing is building a bridge that allows mainstream investors, individual investors, and institutional investors who can't normally access these private equity, private investments to participate and to invest.
Sure. So what is the size of the fund initially?
So we're just doing a small raise at the moment ahead of the listing. The goal is to raise between $30 and $50 million concurrent or immediately after the listing.
Okay, and planning to trade where?
Current plan is trade on NEO, exchange in Canada.
Right, okay, fantastic. So why don't you give me some example of some ESG investments, because a lot of people have a hard time differentiating which qualifies and which doesn't.
Yeah, I mean, a good example would be a company called D-Light that was started in the US and created a product for developing country markets that replaced kerosene lanterns in homes and is now in 100 million homes. And what they did is they came up with a rechargeable solar light that you could leave out during the day and then bring into the house at night. And what they found was that families couldn't pay for that cost up front. They were paying for kerosene every day, but they couldn't pay the $30 or $40 for the lantern. So what they created was a very simple pay-as-you-go system. Most families have access to very simple cell phones and credit in developing markets. So you could pay as you go. You could use your cell phone credit to pay down the cost of this lantern. And after 6 months, you'd own it outright. And the impact in terms of indoor air pollution, which is a huge killer and source of sickness in many of these countries, is eliminated. So very successful venture business. They grew to reach 100 million households, and we're a private company, private equity funded, venture capital funded. So pretty typical profile there. And in that case, we would have had exposure to a company like D-Light earlier on through the public listing, made investments in it while it's private, and given many of our investors who otherwise are not accredited, wouldn't qualify, an opportunity to invest in this business.
Sure. Okay, so that D-Light obviously checks the boxes of environmental and social, but what about the G? The G is for governance, I understand, and so does that imply that the management of the company has to meet certain criteria?
Yeah, I mean, the changes in expectation around governance have been evolving in the last 10 years. So, it covers everything from transparency, rules and engagement around bribery in international markets, but also covers issues like diversity within boards and diversity within hiring practices. So, from our perspective, we expect companies to aspire to meet those goals. I think it's important to say that, small startup companies with a team of 5 or 6 people, it's difficult for them to demonstrate full diversity in terms of, ethnicity or age or gender when they're a small business. but we want them to show that they have a commitment to hiring for diversity across the business. And that would be a sort of classic example of a governance requirement that you would see both in public, large-scale public companies and also in impact investments.
I see. So the value proposition then for the retail investor is that they will gain access to companies that they would not otherwise see until they were a publicly traded entity?
That's exactly right. So that lift in growth and valuation that occurs from the early days, the sort of formation days of businesses where there's opportunities to invest in angel and seed rounds, they would get the exposure to that valuation all the way through to either a public listing, which is one path of these companies, or a strategic acquisition, or hold the stock as they become significant growth and yield companies over time. We're not anchoring all of this to the idea that every company we're investing goes public. We're just saying that some of them will, and that'll be a great path for those businesses. So it allows retail investors access to what's really been a rich person's sport, private equity investing by family offices, accredited investors into early stage businesses. We manage the due diligence and quality control. We select the companies, we monitor and track them. We may even get involved in the boards in some cases. And our vehicle allows people who otherwise couldn't invest in those companies to get access.
I see. So the investment thesis behind it would be then that the retail investor acquires a position and then gets to realize the appreciation and value of the shares based on the appreciation and value in the companies in the portfolio then.
That's exactly right. Yeah, it's a portfolio company. Think of it as being a bit like a fund, except it's evergreen. It's not a closed fund, which most impact investment funds are actually eight-year funds, closed funds. This is a permanent capital structure. So the growth in the value of the portfolio companies will be reflected in the overall value of the business.
Uh-huh. And are there tax advantages for the retail unit holder in your fund in either the UK or North America?
Yeah, certainly in North America, or certainly Canada, I can speak to these. You can hold the stock in tax sheltered vehicles like the retirement savings plan. So because it's listed and because there's a valuation attached to it, you can hold those within some of those tax sheltered vehicles. I don't know about the US. I think the UK has similar provisions, but that requires a public listing in order to participate. Whereas a private company, you can't put into those tax sheltered vehicles because you'd have to pay for a valuation.
Sure. There's been a lot of criticism in the mainstream media surrounding the greenwashing of companies who purport to qualify as ESG investments, though that qualification, upon a little examination of their business, seems a bit dubious. Recently, the European Union announced that they were going to approve liquefied natural gas projects as well as nuclear projects as ESG investments. And that sort of had me scratching my head, especially given, the 500,000-year half-life of spent nuclear fuel rods. And of course, the greenhouse gas effects of burning natural gas in any way, shape, or form. So how legitimate is the ESG designation in your opinion?
It's evolved very significantly from where it started, where a minority of companies would take the obligation seriously. Within Canada now, if you look at the Responsible Investing Association, 50% of listed companies, more than 50%, have ESG reporting. And I think it's an evolution where it's become much more widespread without people necessarily, as you're suggesting, thinking about the underlying services and goods the company produces. So we don't describe ourselves as principally an ESG fund. We're an impact investment fund. So the companies we focus on are sort of unequivocally high impact in terms of social or environmental outcomes. We're not looking to develop, new digital apps that happen to have a good social or hiring policy, or mainstream products and services that donate money. We're looking for companies where the core business is an environmental or social benefit or an outcome. And that, some of the examples we look at in Canada could be Indigenous-owned businesses that provide that develop cosmetics, for instance, using traditional environmental knowledge, or companies that provide environmental services, or invest in conservation, or support access to employment on a large scale for people with barriers, physical or geographic barriers to employment. So where you can identify and measure and track a non-financial outcome alongside the financial outcomes. And so we have a rigorous impact framework that really digs into the core of what the company does. And because there are so many great companies out there, we don't have to worry about operating in the gray areas. We get to choose the very best and most impactful companies.
Mm-hmm. Okay, and so what is the timeline for an investor who wants to participate in this?
So we're currently in a small placement round to get the initial investments out of the way, and we'll be listing within 60 to 90 days. So there'll be a concurrent finance with the listing. For investors that are interested, absolutely contact us through the website for the information, email at the website. We're building up a roster of people interested in following. We've got a good social media presence. So we announced this really early because we wanted to build that retail investor following and social media following. And we'd like people to come along with the journey with us.
Sure. All right, James. Well, that's a great introduction. I look forward to seeing the company go live, and best of luck to you. Thanks for joining us today.